Ladies and gentlemen, good day and welcome to the Q1 FY26 earnings conference call of Yatharth Hospital and Trauma Care Services Limited, hosted by Philip Capital PCG Desk. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. Let me draw your attention to the fact on this call, company's discussion will include certain forward-looking statements which are predictions, projections, or other estimates about future events. These estimates reflect management's current expectations about the future performance of the company. Please note that these estimates involve several risks and uncertainties that could cause company's actual results to differ materially from what is expressed or implied. I now hand the conference over to Mr. Aman from Philip Capital India Private Limited. Thank you, and over to you, sir.
Thank you, Shruti. Good morning, everyone. On behalf of Philip Capital Private Client Group, I welcome you all to the Q1 FY26 earnings conference call of Yatharth Hospitals and Trauma Care Services Limited. From the management, we have Mr. Yatharth Tyagi, Full-Time Director, Mr. Amit Kumar Singh, Group Chief Executive Officer, Mr. Nitin Gupta, President Finance and Chief Operating Officer, Mr. Pankaj Prabhakar, Group Chief Financial Officer, Mr. Ashutosh Kumar Jha, Group Chief Strategy, M&A and IR, and Mr. Sonu Goyal, Group Finance Controller. I now hand over the conference to Mr. Tyagi for his opening remarks, and we will then open the floor for the question and answer session. Over to you, Mr. Tyagi. Thank you.
Good afternoon and a very warm welcome to Yatharth Hospitals and Trauma Care Services Limited earnings conference call for the quarter ended June 30, 2025. Joining me today are Mr. Amit Kumar Singh, Group CEO, Mr. Pankaj Prabhakar, Group CFO, Mr. Nitin Gupta, Group COO and President Finance, Mr. Ashutosh Kumar Jha, Group Chief Strategy, M&A and Investor Relations, and Mr. Sonu Goyal, Group Finance Controller. Our earnings presentations have been uploaded to the stock exchange and is also available on our website. We hope you have had a chance to review it. I am pleased to report another quarter of stellar performance, achieving our highest ever revenue and profitability. Our revenue grew 22% year-on-year, while net profit surged by 38% year-on-year, reflecting the strength of our strategic initiatives and operational excellence. A key highlight this quarter was the Greater Faridabad facility, which turned net profit positive in Q1 within just 1 year of operations. It contributed rupees 234 million in revenue, accounting for approximately 9% of our total revenue. This rapid turnaround underscores our capability to ramp up and optimize new assets effectively. Looking ahead, our new hospitals in New Delhi and Faridabad, with a combined capacity of 700 beds, will further accelerate growth from Q2 FY26 onwards. The New Delhi facility was inaugurated in mid-July 2025, and the Faridabad facility is scheduled for inauguration in late August 2025. Both the facilities are being equipped with cutting-edge technologies, including robotic surgery, equipmented state-of-the-art diagnostic infrastructure. We are also onboarding leading super specialists, which will enhance our clinical strength and brand equity in these regions. The latest of which is pediatric cardiology team, which will be the first in Noida region, which is already taking great strides in the treatment of complicated pediatric cases. Our commitment to clinical excellence was demonstrated by several complex cases handled this quarter, such as an 11-year-old girl from Tajikistan, initially misdiagnosed with lymphoma, was correctly diagnosed with hemoma at our facility. Our team successfully removed a 2.5 kg tumor through a combined sternotomy and thoracotomy. In another case, a 33-year-old woman with advanced lymphoma and multiple organ complications was treated with intensive care dialysis chemotherapy by our oncology team. She achieved complete remission and is now on maintenance therapy with no signs of recurrence of tumor. These cases highlight our clinical capabilities, advanced infrastructure, and growing reputation as a leading quaternary care provider in the region. We continue to focus on improving our case mix and payer mix, supported by strategic investments in super specialty services. We have made significant progress in our medical value travel initiatives. Recently, we have collaborated with the Children's Heart Fund and Black Lion Hospital, the largest government hospital in Ethiopia, paving the way for a patient transfer program. We also conducted continued medical education program on IVF in Mauritius, along with patient screening to identify potential treatable cases. We are preparing to open an information center in Baghdad as well. Additionally, we are working with Chinor Medical Center in Tashkent to establish a representative office serving as a hub for medical value travel for countries such as Uzbekistan, Tajikistan, Turkmenistan, and Kazakhstan. These initiatives are expected to drive medical value travel and contribute meaningfully to overall growth in the coming years, along with improvement in operating and financial metrics. We are also pleased to report the resolution of the Jhansi land issue during the quarter. The Commissionerate of Sagar Sambhav, Madhya Pradesh, following the direction of Honorable High Court of Madhya Pradesh, has set aside its earlier order challenging our ownership over the land. This outcome brings legal clarity, reaffirming our ownership and ensuring operational continuity. We are also in the process of transitioning our statutory auditors, with our current auditors resigning in this board meeting. We will propose the appointment of well-reputed firm MSKA and Associates, a member of BDO International, at the upcoming AGM. This, in line with a commitment to strong governance practices, underscores our vision for a strong and transparency to all our stakeholders. As we move forward, we remain focused on strategic expansion to strengthen our presence in North India, clinical excellence, and continued investment in advanced medical technologies. We are confident that these efforts will continue to deliver superior healthcare outcomes and create a long-term value for all our stakeholders. With that, I would now like to hand over the call to Mr. Pankaj Prabhakar, our CFO, for a detailed financial update.
Good afternoon, everyone. I am pleased to report that Yatharth Hospital has continued its journey of accelerated growth, delivering a strong result for the quarter ended June 2025. During Q1 FY26, we achieved a revenue of Rs 2,578 million, reflecting a 22% YOY and 11% quarter-over-quarter growth. This performance was driven by higher occupancy rates as well as improvement in ARPOB, supported by our strategic focus on super specialty services and operational excellence. Our newer hospital lead the growth, with Jhansi Orchha Hospital reporting a significant 63% year-over-year increase, contributing 7% of total revenue. The Greater Faridabad facility, which got operationalized in May 2024, has ramped up well and now accounts for 9% of total revenue. We witnessed a strong patient volume growth in the quarter. Inpatient volume surged 27% year-over-year, and outpatient volumes rose 20% year-over-year, reflecting the growing trust in our services and the effectiveness of our outreach and engagement initiatives. Our focus on high-value super specialty services has resulted in a 6% year-over-year increase in the ARPOB, reaching a record of rupees 32,395 for Q1 FY26. Notably, Noida Extension achieved an ARPOB of rupees 39,830 with 70% contribution from super specialty services. Our Greater Noida facility reported an ARPOB of rupees 38,377, up 9% year-over-year. Notably, oncology now contributes 17% of Noida Extension's revenue and 10% of the group's revenue, making an 49% year-over-year increase. On the profitability front, EBITDA rose 20% year-over-year and 13% quarter-over-quarter to rupees 645 million, demonstrating 13 consecutive quarter of growth. EBITDA margin improved by 41 bps sequentially and stood at 25%. Despite higher depreciation due to ongoing expansion and investment in advanced medical equipment, our new net profit has grew 38% year-over-year and 9% quarter-over-quarter, reaching to rupees 420 million. Our balance sheet position stood healthy with a strong net cash position, providing us with the flexibility to capitalize on future growth opportunities as they arise. Looking ahead, we remain optimistic about sustaining our growth momentum in both revenue and profitability. Our strategic priorities will continue to focus on operational excellence, sustainable growth, and capitalizing on emerging opportunities in healthcare sector. Thank you for your attention. I would now like to hand over the call to the moderator for question and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Amey Jain from Lucky Investments. Please proceed. Mr. Amey? As there's no response from the current participant. Yes, sir. Yes, sir.
Just a small correction. This is Somil, not Amey. That was the confusion. But thank you for the opportunity and congrats on good set of numbers, sir. Can you lay out ARPOBs in the new hospitals and the status on the upcoming hospitals?
So, for upcoming hospital for Delhi, as we have stated earlier, this will be ARPOB be better than probably what at the current ARPOB of our flagship hospital Noida and Greater Noida, which we are operating as of now. So that you can figure it out. For a Faridabad, I would say that's going to be in a line of what Noida Extension is operating as of now. So this is what as far as ARPOB is concerned.
And as far as for the already started new hospitals, which was your earlier question, that is for the Greater Faridabad, the ARPOB that we currently have is around 31,393 for the Q1. And, as Mr. Singh mentioned, the upcoming 2 new hospitals, which would be starting, the Delhi hospital has actually started last month, and the Faridabad hospital will be starting late of this month. We do expect ARPOB there to be more than our group average ARPOBs.
Okay. And what about Jhansi, sir? You mentioned there was 60% year-on-year growth. How much did the ARPOBs rise here?
So Jhansi, as we have stated earlier as well, the Jhansi going to be the remain on the ARPOB will not be a much change. Jhansi has a volume growth, right? So Jhansi will be in a line of close to 15,000. I think that is what I think we are reaching there, 14,000 something. 14,000 I think ARPOB as of now, I think. Yeah, 13,500 something. So anything between, closer to 15,000 to the best case scenario of, 16, 17,000, that will be, I think, it will be a pleasing number for us.
Right. Okay. And two more questions, sir. One on the timeline for the new hospitals. Are we on track? And
Yeah, as I just
secondly, on the
mentioned that,
margins, and secondly, on the margins for the full year, you mentioned you expect it to remain around the same levels as quarter four for the entire FY26. Are we on track for that as well?
yeah, so the upcoming new hospitals, as I mentioned, Delhi has already started, got operationalized. So its revenue will start flowing from the month of August as we speak. And the bigger hospital in Faridabad, the 400-bed hospital, we are planning to inaugurate it late August. So the revenue for these two hospitals, you will start seeing from quarter two onwards. So we are pretty much on track for that. As far as the margins are concerned with the operation of these two hospitals, yes, we do expect, these two hospitals, there would be certain drag on the EBITDA margin compared to the whole of FY25. But quarter four of FY25 would be a right analysis to compare the margins, and probably a percent up and down from the quarter four would be a right estimation for these two hospitals now starting for the overall group.
Okay. When do you expect these two new hospitals to reach breakeven, sir?
See, if you look at Greater Faridabad Hospital that, got operationalized 12 months ago, that hospital has, in the latest quarter, now become profit positive. So, which is, we feel, is a good achievement for any hospital starting operations within 12 months of it. So, we do expect probably these two hospitals to follow a trend somewhere around 15 months would be a right estimation for these two hospitals also.
Okay. Got it. Right. That's it from my side. Thank you so much and all the best.
Thank you. The next question is from the line of Himanshu Mali from Walford PMS. Please proceed.
Hello, sir. Congratulations for the good set of numbers. I have two questions. So my first question is, what is the share of MVT now and how it will look in future? And the second question is the share of dialysis and chemotherapy now and how it will look in further quarters.
Okay. So, as far as your first question is for the medical value-added tourism, international patients is something that we have recently started catering to, because if you look at Delhi NCR, international patients come for high-end treatments like oncology, radiation oncology, liver transplant, bone marrow transplants. These are the programs that we have just started over the course of last 1.5 years. As soon as we have started these treatments, we have seen a good flow of these patients now. As I mentioned in the commentary itself, that we have tied up and opened up, various offices across the CSF countries. There's some hospitals that we have tied up there. So we are seeing good step up in the volume as well as the contribution of medical tourism is concerned. And your second question on the chemotherapy aspect, I think we would, in a large way to generalize it, how we look at it in terms of oncology. Because, not just chemo, but the whole radiation oncology, the surgical oncology, as well as the bone marrow transplant. We have placed strong emphasis on that. And we are quite happy to see that year on year, we have shown 50% growth in our oncology business. And oncology is now contributing close to 10% for the overall group. We do expect this number to even go higher, because remind you that our upcoming hospitals, both the Faridabad as well as the Mall Town Hospital, within few months will also be having radiation oncology. So these two hospitals will also act as oncology feeders for the whole group, and the 10% radiation oncology that is for the complete oncology that is today for the whole group can even grow around 15% in next couple of years as far as the total payer mix is concerned.
Okay. Thanks. That's from my side.
Thank you. The next question is from the line of Dhruv Maheshwari. Please proceed.
Hi, Ritika here from Perpetuity. So just wanted to understand that the Greater Noida Hospital, the occupancy has been for years has been around 60 65%, and Noida Extension also seems to be plateauing at an occupancy of 61%. So do you see a breakthrough in this? That would be my first question. Secondly, wanted to understand that the Noida hospital had a 79% occupancy in quarter 4, has gone up to 86%, so quite a huge jump. So, what was the factors contributing to this, and have we been improving the payer mix as well? And the third would be on the other income and the tax increase.
So as far as your first question is concerned, Greater Noida and the Noida Extension has a occupancy almost similar what we had actually. But what you need to look at it, well, the Yatharth mentioned in a commentary about it, the IPD numbers, if you see, that has increased. So your LOS has decreased. So we have treated more patients. However, because of the LOS, and that is a deliberate attempt. As we had said in a previous quarters, we are trying to sanitize our, the payer mixes, right? So these are the impact of it. However, I think that this percentage, we are very much satisfied with the Greater Noida with the 67% of occupancy and Noida Extension the 61%. The totality numbers, if you see the IPD numbers, we have treated more. That's the first, the answer of your first question. Second question is about Noida. Yes, Noida occupancy has increased, significantly increased, but the numbers, if you see, as we had mentioned earlier, the earlier number, if you see, and now we see the cash TPA Noida has done, Noida is doing better. This was a deliberate attempt, as we had said earlier. So we are reducing bit of dependency on the government, so the cash TPA, and then the specialty mixes also has gone better. So this is what the thing. Third answer.
Yeah, as far as your third question on the other income is concerned, so the other income that you see for this year is basically the interest the company has received on the certain FDs that we were having, both from the QIP fund that we raised as well as certain internal accruals we had. So, over the course of upcoming quarters, that will also be generalized. But for this quarter, yes, there was other income received due to the interest that we have received on the FDs.
Okay. So what is your payer mix currently?
So as far as the payer mix is concerned, as we have always maintained that we are reducing our government business, which, a year and a half ago used to be somewhere around 40%. As we speak today, in the latest quarter of Q1, it is around 35%. And the remaining is, equally divided between the cash as well as private insurance, with private insurance being bit more in terms of the volumes, but in terms of the revenue, cash component might be a bit more. And we are seeing good growth in our international patient flow as well. We are quite confident that maybe with all these, steps that we have taken in medical value tourism, with the airport opening up, with now, these new leading star doctors on our board, we feel international payer mix can even touch close to double-digit numbers in a couple of years for the whole group.
That's good to hear. And just lastly, what is your net cash on the books?
So today, we would be upwards of around 300 crores, and when we closed the last financial, we were close to 500. So the amount that has been spent has been on the equipment front, or in the upcoming 2 new hospitals of the Delhi hospital as well as the Faridabad hospital.
Okay, thank you.
Thank you. The next question is from the line of Harsh Shah from Seven Rivers Holding. Please proceed.
Hi, sir. Good afternoon. And a strong start to Q1. So just wanted to reiterate, you mentioned that the impact on EBITDA from the 2 new hospitals, that is Delhi and Faridabad, will be 100 bits, right? And it will get neutralized by Q4. So Q4 FY26, we should be back to 25% EBITDA margin.
Yeah, I think rather than seeing quarter-on-quarter, how we see it for the full year, we feel, as I mentioned, EBITDA margin would be somewhere close to what we had in Q4, maybe 1% up and down. That's how we are looking at it. And Q1, we also saw a good EBITDA percentage as well as good EBITDA growth because the Greater Faridabad Hospital has become also EBITDA positive. So the drag that the Greater Faridabad Hospital had last year will not be having this year. So even though we have two hospitals operationalizing, we also have one hospital who is now turning EBITDA positive for the year.
Okay. And sir, how should we look at these two new hospitals in terms of, if I look at Q4 FY26 exit run rate, what kind of occupancy do we expect? And what kind of payer mix will this new hospitals have? Because I believe the government dependency might be low in this newly commenced hospital. So what kind of payer mix do we expect? What kind of occupancy do we expect, say, on Q4 FY26 exit run rate basis?
So again, rather than quarter-to-quarter, how we feel is that after first year of operation, so technically they are starting in Q2. So the right estimation would be a year from Q2. We do expect both these two hospitals to have an occupancy somewhere around close 30 to 35%. And that's what, our existing other new hospitals have also had. As far as the payer mix is concerned, yes, you're right. There would be a very less government business, similarly to what we have already proven in the Greater Faridabad Hospital, because that's also a reason why, the hospital has achieved good numbers because the dependency on government business is very low there. We have hired a lot of star doctors also in that region. So we do expect for these two hospitals on the similar line, maybe government business should not be more than 24% in these two hospitals going forward.
And sir, on FY26 as a whole, do we still expect our ARPOB to increase by 10%, say for FY26 as well as FY27 on blended basis?
Yeah. So it's not that anything, as we have said, anything between 8 to 10%, that's, I think, the ARPOB growth which we are looking at. So we have all the drivers. So I think we believe that I think this will be easily achievable.
And the last question, any update on the income tax investigation that you would share?
So, as we were in Q4, the company is quite happy with the progress in the income tax matter. It is the status quo from Q4. That is AKS, which is a very large subsidiary of the company, contributing close to around 40% of the revenue. The income tax audit is largely being completed, and there's a minuscule demand that has been arise, and in the coming time, we would be looking to pay that and settle that off. As well as for the whole remaining company is concerned, we do expect, somewhere close to the end of this calendar year, that also will be completed. And as we have always maintained, before this closing of the financial year or somewhere close to the end of the calendar year, we would be completely looking to settle off the complete matter, and whatever amount would be required, if at all, would be company would be well capable of handling that, and it would be a very small amount that we are anticipating in that matter is concerned.
And if I can squeeze in just one last question, if you can share the status and timeline on the brownfield expansion at our Greater Noida and Noida Extension hospitals.
Yeah. So, we have just started two new hospitals. That is the New Delhi Hospital and the Faridabad Hospital that we have just recently starting now this month. So the more focus was there in ramping up these two hospitals. Now that these two hospitals are started, we are shifting back our focus to finish up our brownfield expansion. Greater Noida Hospital is already at a commencing infra stage. That means the construction is, about to start for the digging of the basement, creating all the floors up. As far as Noida Extension is concerned, we are at finalizing stage for the maps for the whole building. Both 200 and 250 beds will be added in these two hospitals, and the timelines remains largely similar, maybe 2-3 months up and down. But however, for last quarter, we were more focusing on the Delhi and the Faridabad hospitals. The brownfield expansions is now again back into the focus for the quarter 2.
All right, sir. Thank you so much, and all the best.
Thank you. The next question is from the line of Sumit Gupta from Centrum. Please proceed.
Hey, hi, good afternoon. Am I audible?
Yes, sir.
Yeah, go ahead.
Yeah. So first question is on the case mix. So just want to understand, like, what is the trajectory over the next 2 to 3 years, where we can see onco share rising from current 10% and the medicine share declining. So can we expect that to increase?
Yeah. So, in fact, Sumit, you see the future trends gonna be as onco definitely gonna increase that. You see the other transplants and high-end procedures will increase, right? So definitely in terms of the percentage, internal medicine and conservative will be a down, but not the absolute number, right? Because as we are growing these things. But yes, this is a trend. That's more super specialty, particularly leading by the oncology, gonna be the driver. So
Yeah,
all
so I was
specialty, in
expecting
fact. Yeah. And as I said earlier, see, we are not a matured, all these departments are not matured, Sumit, as of now. So as we said that quarter and quarter, in fact, every super specialty departments are growing, right? But yes, the faster growth coming from the oncology.
Yeah, I'm talking from 2 to 3 years down the line. So a bigger picture. So in medicine, let's say as of now it is contributing around 20%, 18 to 20. So can it go to around 10, 11% over the next 3 years, let's say?
But I think that's internal medicine. Medicine is very, very important because medicine can feed all super specialty. So, reducing medicine is also not a smart move, right? So there has to be a good balance. So I believe that if medicine is contributing around 15 to close to 15%, 17%, I think that's a fairly good number, right? Because that works as a feeder for a super specialty.
Understood.
And 2 years down the line, what we are focusing is on improving on all the cogno specialties, cardiac, onco, ortho, and neurosciences.
Understood. Thanks, sir. And with respect to the depreciation, how should we look at it? Shall we expect it to be at the same trend, or should we see that for the next 2 years?
So for next 2 years now, so as we are adding 2 more facilities, so that will definitely impact, but the impact is not so much. So we can presume around 20-30 million impact quarter on quarter on a total basis.
Okay. And for the next 3 years, how much of cumulative cases you are planning to spend?
Can you repeat the question?
Cumulative capex for the next 3 years?
So cumulative capex would be for the next 3 years would be in the tune of if you include both brownfield as well as greenfield, it would be in the tune of around 1,400 to 1,500 crores over the next 3 years.
And how much would be maintenance?
Maintenance is a low capex for us. Maintenance is actually not included in this. Maintenance for the whole year should be around 20 to 25 CR for us.
We have already ramped up our hospital in the recent past, and all the kind of a new equipment was already in place. Just a few civil work has to be there, as we mentioned about the brownfield expansion as well. So that's the only thing which will be coming up. Rest of the thing has been already equipped in all the centers.
Understood. Thank you. All the best.
Thank you. The next question is from the line of Nirali Shah from Ashika Stock Services. Please proceed.
Yeah, thank you for the opportunity. I had a couple of questions. I just wanted to know, is there any update on the Ghaziabad greenfield opportunity? And if you were also evaluating 2-3 more cities, has there been any progress on those fronts?
So, as you are right, we are evaluating not just Ghaziabad, we are evaluating other opportunities within NCR, Ghaziabad, Gurgaon, outside NCR, also big cities basically. And the company would be looking to add at least one, acquisition for this year. Maybe it could be a greenfield land, it could be a stressed asset. The company is evaluating certain opportunities, and we remain confident for the remaining of the FY26. We will be adding and closing one of these opportunities.
And what kind of investment are we looking at this number? The capex.
Yeah. So for a greenfield, including the land, we are looking to add around, 300 to 350 beds. And including land, I think the total capex outflow that we see is around 300 crores.
Okay. And just wanted to know, the effective tax rate for the quarter is higher than usual. I guess it's around 28%. Are there any specific adjustments this quarter, or should we still assume a full year ETR, as guided earlier, to be around 24%?
Basically, if you see the current tax rate is coming around 28.32%. Okay. And there is not an adjustment because there is a reversal. Earlier, there were deferred tax assets in our Ramraja Super Specialty Hospital that is located in Odisha. Right now, there is a deferred tax liability. That tune of to total 28% of the overall percentage in the tax rate.
So on a full year
basically,
basis, we can expect it to be?
No, it will come down to 25-26%.
Okay, understood.
Thank you.
And just a last one on the ARPOBs. So this quarter is around 32,395, and that is likely aided by Faridabad break-even. The two new hospitals, we were expecting it to be around in the range of 33 to 35,000, correct?
It would be a bit
was,
more
Mhm.
no, it would be a bit more for the two new hospitals. It would be somewhere around 38,000 for those two new hospitals, that New Delhi as well as the Faridabad hospital, the bigger Faridabad.
Understood. So that will kick in from second quarter.
Yes. Most big impact you would start seeing from Q3 onwards because we are midway of Q2 already and Faridabad is yet to start. So the big impact you should start seeing from Q3 itself.
So on a blended basis, say for 26, what would be the ARPOBs? What is the number that we are building in?
See, it's no forward-looking number, but I can tell you can just correlate. As of now, you see the Greater Noida extension is in a line of 40,000, close to 40,000 ARPOB, right? As you said that Faridabad and Delhi would do a bit more, and the Faridabad would be in a line of this thing. So this is what I think I can tell you as of now.
Understood. That's it. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please limit your questions to 2 per participant. The next question is from the line of Aditya Sen from Fintalk. Please proceed.
Hello. Hi. Thanks for the opportunity. I'm audible, right?
Yes, please go ahead.
Yeah. So this is regarding the international patients that we are targeting. So as we added to the double digits as a percentage of our total patient mix, will there also be any additional cost associated with the procurement of international customers?
No, so typically, as of now, we are a single-digit number, and then so what do you need? You need basically there's a good team. Team has already been added, right? So when you start doing your various information centers, you're setting up various information centers on different places. So that's all the OPEX, right? And then definitely if you're doing international and you understand that the ARPOB is better. So right, I think that's only the OPEX will be this thing. There is no other capex as such, neither even a manpower cost. It's already been taken care of now.
Yeah, and we do not see any impact on our profitability or EBITDA due to increase in the international patients. So technically, it will not increase or change any of our parameters once the international business increases. In fact, it will better our ARPOB numbers because all the expenses mostly have been done in terms of hiring the doctors, getting those equipments in place and starting those treatments. Now just the volume has to grow.
Understood. So I was asking this question particularly because there is a competitor of ours in Gurgaon who has a higher ARPOB because of international patients, but the EBITDA margin is way low than our EBITDA margins. So I was just afraid that if we are adding international, we might not fall back to their level of EBITDA margin.
The difference between that competitor and us is that we are not just single-handedly focusing on international patients. Still 1/3 of the revenue comes from cash patients, 1/3 comes from private insurance, and certain still comes from government. We will not make international patients contribution to 1/3 of our revenue. So that's the difference. It will still be close to around 10%, which is how a lot of other hospitals also operate on.
Okay, fair enough. Got my answer. Thank you.
Thank you. The next question is from the line of Bhagwan from Prosperity Wealth Management. Please proceed.
Thank you for the opportunity. Considering the operationalization of 2 new hospitals, what is the estimated revenue growth on a consolidated level for current year and next year, FY 27?
Our revenue growth expectations for the whole year remains the same. Our guidance remains the same, as we have always maintained that, last few years, the company has grown close to around 30%. I think in the upcoming years also, including this year, we remain on track for that.
Okay. Similar range of 30% we can expect. Hello? Hello?
Yes. Yeah, please.
Yes, I think I got my answer. You're saying 30% growth can be estimated. Hello?
Yes.
Okay. Thank you. Thank you, sir.
Thank you. The next question is from the line of Surya Narayan Nayak from Sunidhi Securities. Please proceed.
Yeah. Thank you for giving me opportunity. Congratulations for the great set of numbers. So that, just one question is that, how are you going to phase out the addition of new beds in the new Faridabad 400 and daily 300 units? Because the press release is saying that, we have added 300 beds. So can we assume around 250 census beds from the Q2 onwards? Likewise, can you please guide for the Faridabad unit also?
Yeah. So, whenever we're starting a hospital, the beds become operational on a scale wise. But, it is not that we have restricted to any beds. We might operationalize like the Delhi hospital, which just inaugurated. Today we can have operationalized close to 150 beds. But if we get 151 patients today, it's not that that patient would be refused for admission. So the scalability of the beds is there as and when required. The infra is ready. The nurses are there, the equipments are there. As and when the patients are coming, we will look to add up and scale up those flows. So even from day one, we are starting the hospital with complete infra. It's not that, certain floors are not ready or certain construction is going on in the Delhi hospital. Everything is complete. So similarly to what we did in the Greater Faridabad hospital, we would be ramping up our census beds and operational beds on a similar manner.
Okay. And sir, for the Noida extension, Greater Noida extension, the current occupancy is, you said, similar to that. So, can we expect, what would be the expectation for the peak occupancy in these regions in the NCR, especially, can it go to, let's say, 75 or 80%?
So it's Noida extension, Greater Noida is above 400 bed facility. So if anything 75 to 80, it will be a very, very ideal and very optimal utilization. I think beyond that, it's difficult. So I think that's we are inching towards it. So anything 75 to 80 can be a guidance.
And certain drivers are there for this, which we are quite confident that in the coming years and the coming quarters, you will see increase in occupancy in these two hospitals. Specifically, we have added a lot of star doctors in even these two hospitals. We have started certain new treatments like the transplant program, the radiation oncology, where the volumes is bound to increase, as well as increase in international patients. So these three are good, drivers for the growth of occupancy also. And we're quite confident that, in the coming quarters, you will see that rise in occupancy.
Yes, sir, because, you are adding a new, even offering. So can we consider that, some of the areas where we have not actually matured or not established, and often establishing our cases maybe in radiation, oncology and other areas, we will be getting higher occupancy and not before that?
Already, it's not just the new therapeutic areas we have added, even in the existing areas like, pediatrics, ortho, gynae, there's constant upgradation of departments and the new doctors that are added. New doctors are not just added in the new specialties, but even our existing specialties. So there also we do expect increase in the volume, including general surgeries, including certain other super specialties like gastro, like neuro, that we have been doing since a long time. So we do expect occupancy to grow from all the super specialties. But yes, highest share will increase of the super specialties, likes of cardiology, oncology, and neurosurgeries.
Okay. Can it be fair to assume that we will be beating the inflation in all the NCR region hospitals, at least for next 3 years?
Yeah, because twice in a year we keep on changing our pricing. So by considering the inflation, we keep on changing the pricing of the overall patient charges. So we are pretty much sure to beat the inflation.
Okay. And sir,
Sorry to
regarding
interrupt, Mr. Surya. May we request you to join the queue as there are other participants waiting for their turn?
Okay, thank you.
Thank you. The next question is from the line of Prerna from Equity Research Program. Please proceed.
Hello, sir. Can you hear me?
Yes, please.
Hello?
Go ahead.
Yeah.
Yes, Prerna,
So
go ahead,
what is the status of empanelment in your New Delhi hospital that you recently inaugurated? Like, how is empanelment going with the insurance and various other government departments?
So, we have started taking all the, private cash patients, as well as for the private insurances. Now the process is ongoing because we are getting fast-tracked our NABHs and other QCI permissions. As soon as that happens, private insurances will be empaneled, and then the number comes for the government empanelments. However, already from day one, nowadays there are a lot of agencies like, CreditBuddy, G-Money, and other aggregators, which does provide cashless facility to any private insurance holder who's walking to a hospital. So he's able to utilize his insurance through those third-party aggregators, and they're able to get cashless treatments. Similarly, we have done that in the past in our Greater Faridabad hospital, and we're doing that today in a New Delhi hospital. So already we are treating private insurance patients there. As far as the empanelment of these private insurance and government empanelments are concerned, I think within the first year, we would be able to get 90% of all private insurance as well as the government empanelments. But it will not hamper our progress of taking those patients.
Okay, sir. Okay. And the last question is on EBITDA margin. You told, that because of the starting of this two new hospitals, the EBITDA margin will be similar to Q4 of FY25. So can we expect around that 24%, or is it going to be lower than that?
Around that would be a right estimation. A percent up and down, but around 24% would be a right estimation.
Okay, sir. Thank you so much. Thank you.
Thank you. The next question is from the line of Vicky from Guardian Capital Partners. Please proceed.
Thank you for the opportunity, sir. So my question is, what was the EBITDA and PAT for Greater Faridabad Hospital for this quarter?
So EBITDA for this quarter in Greater Faridabad that contributes to 1.7% of the overall group EBITDA, and PAT is 3.4% of the revenue in Greater Faridabad.
Okay. And so one more thing I wanted to ask, we have been seeing increase in employee costs as we are onboarding new super doctors. When do we expect this to settle down? Because earlier our employee cost as a percentage of sales was around 17.5, which has inched up to around 19%. So when should we expect this to normalize going forward?
So, but see, as you said, these hospitals like a Greater Faridabad, the new hospitals, right? So you see that the percentage, the employee cost will be the higher. But yes, when they are mature hospital, I think it should be anything between 15 to 17%, 18%. It's an ideal percentage. I think I think we should get settled in it.
Okay. And sir, one more question. These are very early days, but how is the response in Delhi hospital, new hospital that we inaugurated?
We started just on the 14th, so I think that the excitement in the market, I think the medical fraternity is very, very busy. They are excited. There are so many, people are coming, joining this thing. So I think, and as you said, that we are in that area which is a very old but very, very prominent area of the Delhi, right? So there, we see that I think this hospital will do a much faster ramp up in our group.
Thank you, sir. Thank you, sir.
Thank you. The next question is from the line of Yash Modani from Prunartha Investment Advisors. Please proceed.
Hello, sir. Yeah, am I audible?
Yes,
Yes,
please.
sir.
Yeah. So, sir, I just wanted to ask you, what are the drivers behind the increasing occupancy rate in Jhansi also hospitals? And what are your projections for next quarters also in terms of ARPOB?
So Jhansi Orcha, if you see, I mean, that has made a very good progress. Y and Y, I think it's last year it was 45, now it's around close to 60%, right? So Jhansi Orcha is doing good, as you know, that's the hospital delivering good quality care, the all super specialties, the names getting spread in that particular market. And then we have advantage of, there is no other big hospital in that range of 200 kilometers in that region. So I think that's as time moving, yes, bit of empanelment also playing a big role. There are slowly the more government empanelments are happening in that particular hospital. So with the 2 years of operation, it's a 60% occupancy. I believe it's a very good occupancy. And if it's around close to 70-75%, I think that still optimally will utilize the Jhansi.
Okay. And my next question, sir, how do you anticipate the ramp up of the two new hospital and how this will influence the overall occupancy rate group level?
So, with the addition of even 700 beds, and they will take time to ramp up, because as I said that after first year of both these two hospitals operationalized, we feel that both these two hospitals can have an occupancy close to 30-35%. So at a group level, yes, even though with the addition of 700 significant beds, we expect even at the group level, occupancy should increase because occupancy is bound to increase in our existing hospitals of, Faridabad as well as the Greater Noida and the Nord extension.
Okay. Thank you, sir. Yes.
Thank you. The next question is from the line of Aman from Phillip Capital. Please proceed.
So my question is on the capex outlay that you mentioned. So we are currently at 2,300 beds, and we are about 700 beds from our targeted 3,000 number, right? Now, if I look at the capex guidance that you gave earlier of about 1,400 crore, is that number right, just to begin with?
Yes, that's approximately around that.
Okay. Now, if we just roughly do the math, the capex per bed comes out to about 1.52 crores per bed, almost, right? And this is relatively higher than what our historical numbers have been. So is this majorly because do we plan on doing more on greenfield capex that might drag our cost up? Is my understanding correct?
So I think, no, so just to correct you there, when I've said 1,500 crores, it is not just to take a bed from 2,300 to 3,000. In next 3 years, we are looking to add around, 1,200 beds more. That's why, the capex per bed will come down in the tune of 1 crore and not in the tune of that. Because there is no benchmark that we have taken that, we'll just stop at 3,000 once the growth is there. If we have accelerated our growth, we will continue to grow at the same level in terms of adding of the beds are concerned. Because there are a lot of good opportunities, that we have seen and we are evaluating them. It is not that we are chasing a number of beds that we want to be. If a good opportunity is there, we would like to add to it. So that's why we are evaluating few land parcels, we are evaluating few stress assets. So over the course of next, a year and a half or to 2 years, we will be adding more beds than just 3,000 number.
Okay, noted. I just wanted to clarify that. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to one per participant. The next question is from the line of Anand from Kesma Wealth Private Limited. Please proceed.
Yeah, good afternoon, sir. Can you hear me?
Yes,
sir.
Yes, congratulations on a good set of numbers. I just want to understand on the brownfield expansion of Greater Faridabad Hospital. Would you see a brownfield expansion by how many beds, let's say, in the next 4 or 5 years for Greater Faridabad?
So Greater Faridabad does not have any brownfield expansion possibilities. That hospital is currently 200 bed, and in fact, that is the reason why we have acquired another hospital in Faridabad, which is now a 400 bed hospital, which is going to start at the end of this month. Maybe the hospital you're talking about is Greater Noida, which currently is 400 beds, and we are doing a brownfield expansion of 200 beds there, which will be coming to utilize that capacity within 2 years.
Okay, but there is no brownfield expansion for Greater Faridabad at all?
No.
Okay, fine. And I just want to get an understanding of what will be the census, as a percentage of operation base, what will be the census percentage of the new hospitals, Faridabad and Delhi?
85%. 80 to 85%.
Sorry?
80 to 85%.
Sorry, can you repeat again? It was not very clear.
It's going to be 80 to 85% of the total bed.
85%. Okay. And what would be the occupancy rate for these two hospitals as well? Do you have any estimate?
Well, as we've already mentioned, after a year or so, if somewhere around 30-35% would be a right estimation.
Okay, that's all the questions I have. Thank you.
Thank you. The next question is from the line of Mohammed Patel from Edelweiss Public Alternative. Please proceed.
Yeah, hi. I just wanted to have one clarity. So can you break up the capex of 1,500 crores?
Right. So, if you look at it, we are already doing a brownfield expansion of Greater Noida and Noida Extension Hospital. So that comes to around 450 beds. Now, brownfield expansion that we are doing would be doing at a capex of around 60 to 70 lakhs capex per bed. So that is the cost of the brownfield expansion we are doing. Plus, I've talked about that when we are acquiring a greenfield project, as earlier mentioned, maybe this year, around 300-350 beds, we will be spending around 300 crores for including land for that hospital. And similarly, for any expansion of 300 to 350 beds in the corresponding years also, we would be spending 1 crore capex per bed. So that's roughly how it is. Probably within 1,500 crores, we would be able to add around 1,200 beds additional, including the greenfield and the brownfield.
Okay. So this is including inorganic acquisition.
Yes.
Yeah.
Yes.
Thank you.
Thank you. The next question is from the line of Vicky from Guardian Capital Partners. Please proceed.
So thank you again for the opportunity. I just wanted to ask one question. What was the debtor days for the last quarter?
So debtor days for the whole year in FY25 was around 123 days. And I think for the latest quarter also, I think we are looking to reduce that. Somewhere, I think we feel by H1, we should be reaching a number of around 118 to 117 days. And I think that is, if we are on that, because even our scale is increasing, the volume is increasing, but probably at H1, we would be looking to close around 117 days for the debtors.
Okay. Thank you so much.
Thank you. The next question is from the line of Vishnu from Vishnu and Family. Please proceed. Mr. Vishnu? As there is no response from the current participant, we move on to the next participant. The next question is from the line of Omkant Sharma from Vaishan Ventures. Please proceed.
Yeah, hi. Thank you for the opportunity, sir. Most of my questions are answered. I just have one quick question. If you could just touch down on your new hospitals, which is your model town and the Faridabad hospital. Could you just talk a little bit about what is the competitive scenario situation in those two areas, as to which are the hospitals that we would be competing, which are the hospitals which are there in the catchment area? If you could just throw some color.
Yeah. So, as far as Delhi hospital is concerned, within 10 kilometer radius, we have 47 max. But yes, if you see, that hospital is very, in a region where there is a very high density of the population, right? So I think the 3-4 kilometers, 5 kilometers is enough for you to, feed a largely the 60-70% of the bed capacity. So, and that is what, since our competitions are with the Fortis and Max and a few smaller hospitals there, we are making that hospital absolutely on a quaternary care hospital. So that's there, but I believe that, more and more hospitals in any particular region, more and more market develops. I think that we are nowhere inferior in that particular market. As far as Faridabad is concerned,
and also just to add for the Delhi hospital, which just operationalized few weeks ago, the name of the competitors that we just mentioned, we have, taken on board some of the star doctors who have been in those hospitals for last 10 years, last 15 years. So, that's how, we have positioned that hospital. And in fact, how we're trying to compete is also, we're trying to create a very boutique hospital culture where every patient who's entering a hospital is getting care and addressed to. The other hospitals in the region, which might be 7-8 kilometers within a radius, the patient volume and the patient turnover is so huge in those hospitals that patients are sometimes not getting the personal attention that is required. So how we have positioned ourselves is each and every patient that is coming to the hospital will be highly focused on the patient care experience by the same star doctors who have been previously practicing in those regions. As far as Faridabad is concerned, Faridabad is a market we very much understand. We already have a hospital, 200 bedded in Greater Faridabad. We operationalized that a year and a half ago. So this new hospital in Faridabad that we have is also, there are one published hospital chain, but it has many big local hospitals which are still not listed. So those hospitals have already been doing well in that region. In fact, Faridabad, if you see, is an older city with much more bigger healthcare market than even Noida as of today we speak. So, there are a lot of opportunities for, again, similarly from star doctors that we are onboarding in Faridabad. And the good part is we already have a feeder from a Greater Faridabad hospital to feed certain of the specialties that we will be doing here, which we couldn't do there, like oncology, like transplant program, like, certain of the bone marrow transplants. We already have a feeder from existing hospitals to feed a bigger 400-bed hospital in Faridabad also.
Got it. Perfect. And sir, just one from a numbers perspective, right? We see that the employee cost has jumped by about 4 CR Q-on-Q basis. Is that can this be related with the operationalization of this new hospital? And also a corollary to the question would be, let's say by year end, what would this on a quarterly run rate basis? What are the number that we're talking about on an employee cost by the year end?
As I think I've already answered this question. So this as the new hospitals coming up, the percentage-wise, if you see, this usually it looks a bit higher side of it, but we understand that this is going to be remain within the industry practice. Anything between 15 to 17%, 18%, that's what I think that the employee cost, and that's going to settle down. As far as doctor cost is concerned, that's also you see because the new hospitals coming up, the percentage will increase, but this will be well within the range, and we are very much onto it, these numbers. So once this gets matured, I think that's the ideal time when you can, questions on this percentage. But the hospitals are not mature. We just started it. So 1 or 2%.
So what I'm trying to get a sense is this 48 number when we are seeing for the quarter, does that reflect the entire cost of the greater for the Delhi hospital at least?
No, even in the Delhi hospital, because it has actually been operationalized, just few weeks back. So in quarter 2 is when you will see those numbers, and they are not reflecting in the quarter 1.
So you start up in July only.
Yeah, in July itself is when the hospital got inaugurated.
Okay, got it. And just one last question. If you could just throw some, I don't know if you mentioned that, but if you could just talk a little bit on the operationalization of the brownfield capex that we're planning. When are we seeing that to be getting operationalized?
The Greater Noida Hospital should be before the 2 years, and Noida Extension should be around 2 years from today.
Okay, perfect. Thank you. Thank you very much.
Thank you. Our next question is from the line of Urmi Khania from Ledge Advisors. Please proceed.
Hello, this is Urmi from Ledge Advisors. My question is that any revision on the target of achieving the bed capacity of 3,000 beds by FY28, since you have managed to add new beds faster Do we see this target to be achieved sooner than this? And also beyond this 3,000 bed target, the long term, say 5 years ahead, what do you see going ahead? Thank you.
So definitely, we are looking to expand because as I earlier mentioned that we are not just looking to expand at any cost. We're looking to expand because there are some good opportunities that we have identified which are present in the geographies where we operate, where we feel that we can have or even first mover advantages by being present in those geographies. So 3,000 target, well, yes, definitely looks like it might be met before the FY28 target. But even beyond that, for a 5-year horizon, we would be looking to scale up at a similar trend to what we have scaled up in last 2 years. So we would like to continue with the same momentum. As to how many beds it will leave after 5 years, time will tell, but the momentum should be continuing at least within the North India market.
We are not chasing any, particular targets in terms of number of beds. So as and when good opportunity comes, we will be, scaling ourselves.
Okay.
Thank you. The next question is from the line of Anand Kulkarni from Frontway Research. Please proceed.
Hi. Thank you for the opportunity and congrats on a great set of numbers. Most of my questions have already been answered. So just one on the specialty charges. As our share of Congo in total revenue continues to rise, how are we looking at our specialty charges as a percentage of Congo revenue a couple of years down the line? Thank you and all the best.
So,
Hello, Mr. Anand.
So I think this. Hello.
Yes, sir. Do you want me to repeat the question?
Yeah, Anand, can you please repeat the question, please?
Yes. So as I was saying, just one on the specialty charges part, as our share of Congo in total revenue continues to rise, how are we looking at our specialty charges as a percentage of Congo revenue a couple of years down the line?
Specifically, we have not seen that way, but if you see that with the 70% revenue being contributed by this Congo, I think that's and will be having probably the higher expenditure. I mean that's there, right? But as such, if you ask me, we have not seen that way. That's how much in a percentage of the specialties and how much percentage of the expenditure of our Congo. We have not seen it, but yes, you can extrapolate in that way. Because if 70% revenue contributed by this thing, where ARPOB is higher, where the more in high-end surgeries you do, right, where we do transplants and others you do, there are a good percentage of the expenditure. So higher percentage of expenditure goes in those super specialties.
Okay, right. So for last 5 years, if I take it is in the range of 40 to 45%. So do we expect to be in similar range or on the higher end?
I think some 5% higher would be a right estimation, but not significantly higher than that.
Okay, great. Thank you and all the very best.
Thank you.
Thank you. The next question is from the line of Ankul from Invest. Please proceed.
Yeah, I have just one question on the trade receivables side. Our trade receivables have been higher. So anything you can just guide out on that?
I think last year we were quite happy with the OCF conversion the company has done. We had a cash conversion of around 68%. So, even with high receivables, the important part is that we are receiving that money. Yes, the new business that was generated has also, gone into receivables, but the way it happened last year, this year we are on the similar trend. So Q1 itself, we have seen good, receivable position as far as the money that is inflowing to the company. And over the course of next few years, when the government business comes down in the tune of 25%, that's where you could expect the days and absolute number of the receivables to also come down. But more important for us is that the money that is being, generated has been received by the company, and we are happy with that progress for the quarter as well.
Understood. So for FY26, anything that we can assume?
I think I've already mentioned for H1 the number of receivable days that we do expect, and I think for the whole year could be on a similar trend also.
Understood. Yeah. So that's it from mine. Thank you so much.
Thank you. The next question is from the line of Sumit Gupta from Centrum. Please proceed.
Hi. Just one clarification on the tax rate. So, you guided for 25 to 26%, or is it still 24%?
It's 25.67% effective tax rate.
How much do you expect for 26 on a full year basis, basically?
It's coming around 26% on a full year basis.
Okay, cool. Thank you.
Thank you. The next question is from the line of Rudraksh from MB Investment. Please proceed.
Hi. My question is, what steps is the board taking to, improve the corporate governance to your peers peers like Max or Apollo? And my question to you is, what is your outlook for of expansion strategy in niche markets, in niche cities like you have in Jhansi, Gwalior, Agra? What is your expansion strategy there? If you could share some light on that, that'd be great.
Your first question is concerned, as I already talked about in the commentary, we have onboarded BDO as a statutory auditor, who would be taking over, and the existing auditors have accepted the resignation. So BDO being appointed as statutory auditor, as well as Deloitte has been appointed as the internal auditor from last few quarters, and we have been gaining a lot of good insights and improving our operational efficiency through Deloitte is concerned. As far as the second question in terms of our expansion geographies are concerned, I think Jhansi Ocha for us worked out good because it was one of a good ROI, ROC opportunity that we saw. But going forward, we would like to remain in bigger cities. We would not like to experiment much with tier 3 cities. Maybe NCR and capital cities of the big states is where we would like to be. Because we see good growth in terms of paying potential in RCOP in those cities, and that's what we would like to explore more. That's why if you see post Jhansi, we have acquired 3 hospitals that are in New Delhi, Greater Faridabad, and Faridabad. So this sort of reflects is an example of the strategy that the one which we are approaching forward with.
All right. Just to follow up, when do you think that on an average level the group can achieve a average occupancy of upwards of 75%? Barring the new.
That's what I was about to say, because we're constantly adding up new beds, right? So that's why the group level only we can talk about is barring the new hospitals. So I think in a couple of years, our existing hospitals should be at a group level occupancy of close to 75%.
All right. Thank you. That answers my question.
Thank you. The next question is from the line of Mohammed Patel from Edelweiss Public Alternatives. Please proceed.
So how are we going to fund this CapEx?
So we already have a cash position, as we talked about, of around 300 crores as we speak. Today, the company is sitting on zero debt. So that is an option the company will explore in the future. And thirdly, we will be having good internal accruals. So the CapEx that we have talked about is spread across the years, right? It's not that immediately we do require certain things. So I think the company is quite capable of funding it through the internal accruals, the debt, as well as the cash position that we currently sit on.
Okay. Thank you.
Thank you. Due to time constraint, that was the last question. I now hand the conference over to Mr. Aman. Over to you, sir.
Thank you. On behalf of Phillip Capital Private Client Group, we thank all the participants for your valuable time, and especially the entire team of Yatharth Hospitals and Trauma Care Services Limited. Before we close the call, I would like to hand it over to Mr. Tyagi for his closing comments. Over to you, Mr. Tyagi. Thank you.
Thank you, everyone, for participating in our earnings calls for Q1 FY26, and thanks for your questions.
Thank you. On behalf of Phillip Capital India Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.